welcome to The Explainer. Today, we're unpacking the Bhutanese Ministry of Finance's latest Q3 macroeconomic report. We're going to look really closely at the massive, rapid shifts that happened between Q2 and Q3 of this fiscal year, and then we're charting out the country's economic path heading right into 2026 and 2027. So, let's get into it. How does an economy survive a 157% spike in fuel prices? Seriously, what happened between Q2 and Q3 is basically an economic thriller. You just don't see energy shocks of this magnitude very often. And watching exactly how a highly specialized economy absorbs that kind of a blow, well, it's a literal masterclass in macroeconomic management. To make sense of all this data, here's our roadmap for today. We'll start with the Q3 economic reality check, then look at that historic fuel price shock. After that, we'll cover the twin engines of hydro and tourism, debt and the trade deficit, the economic headwinds coming in 2026, and finally, the big 2027 growth rebound. All right, starting off with part one, the Q3 economic reality check. Moving from smooth sailing to sudden headwinds. Let's set the stage here. In Q2, we had pretty smooth sailing. Inflation was totally normal, hovering right around 3.5%. But then Q3 hit and bam, sudden headwinds. Inflation spiked to over 6% by March. This upward pressure was mostly driven by the rollout of the 5% GST in January, which, as you know, forced price adjustments basically across the board. And of course, that was compounded heavily by international conflicts. But here's the wild part. Despite that big inflation jump, the economy didn't just freeze up. Not at all. Credit actually grew by 2.68% from Q2, expanding by over 7 billion ngultrum. And what's really fascinating is where that money went. Housing, hotel and tourism, and manufacturing absolutely led the charge. This proves that, despite rising prices, the economy was still out there actively borrowing, building, and investing in its core sectors. Moving on to part two, the historic fuel price shock, which was the ultimate stress test. Now, the biggest headline from Q3 is a shock to the system that would frankly paralyze most economies. 157%. Fuel prices surged by a weighted average of 157% globally thanks to ongoing conflicts in West Asia. The report actually flags this as the largest price shock the Bhutanese economy has ever experienced. I mean, just sit with that for a second. That's more than doubling the cost of energy practically overnight. Crazy, right? So how do they handle it? Well, this perfectly illustrates the shock absorber at work. If you look at the raw projections, without the National Fuel Price Smoothing Framework, inflation would have absolutely skyrocketed to 17.2%. But government intervention essentially absorbed the blow, pushing that shock down through several rounds of price adjustments. They managed to keep effective inflation below 8%. That is a massive, massive intervention to protect household incomes and transport costs. And you know, it wasn't just one isolated factor. It was a total perfect storm. The data shows that global supply chain disruptions had the single biggest impact. But then, add in pricier crude oil globally and top it off with a weakening currency. The ngultrum depreciated about 8% against the US dollar from October to March, sliding from 88 down to 95. And as we know, when your currency weakens while you're trying to import incredibly expensive oil, the economic pain literally multiplies. That brings us to part three, the twin engines of hydro and tourism. So, how exactly is Bhutan generating the power to push through this storm? It's a fascinating contrast. During the winter months of Q3, hydropower generation plummets to just 20% of its peak capacity as water levels drop. But right at that exact same time, Q3 tourist arrivals surged. It's this beautifully timed macroeconomic offset. Tourism gave the economy a much-needed lifeline exactly when electricity exports hit rock bottom. The numbers here are honestly incredibly strong. Arrivals jumped nearly 57% compared to the previous year. And the demographic breakdown is absolutely key. Indian and Bangladeshi regional tourists make up about 65% of the space. This specific influx of regional travelers acts as a super reliable buffer during that hydropower lull, injecting vital foreign exchange straight into the local economy. All right, on to part four, debt and the trade deficit. Now, surviving a shock is definitely not free. But when we look at how the government is financing this resilience, something interesting pops up. Total public debt actually decreased slightly, stepping down from 110.5% in Q2 to 107.8% in Q3. Now, you might think, oh, they just paid off a massive loan, right? Well, actually, it's largely due to an accounting shift. They reclassified some publicly guaranteed debt to align with reporting standards, and there was also a downward revision of interest during the construction for the PHPAI hydro project. We also saw another big win on the external balance. The merchandise trade deficit narrowed significantly, dropping from a record $50.2 billion null-gultrum in Q2 all the way down to $20.4 billion in Q3. Now, this wasn't necessarily some massive export boom. It's really just because those huge one-off computer machinery imports, the ones primarily for data centers back in Q2, finally normalized and dropped off by Q3. Moving forward to Part 5, Economic Headwinds in 2026. As we cross our temporal bridge into the immediate future, we see that the ministry actually revised the overall 2026 economic growth forecast downward, down to 6.31%. So why the downgrade? Well, because those exact same global headwinds we saw in Q3, the supply chain chaos, the soaring fuel prices, they're dragging out way longer than anyone expected. Plus, there's been lower than anticipated progress in the hydropower projects, which is unfortunately pushing their expected economic contributions out into later years. You can really see this distinct dip for 2026 if you track the data. While services and industry are definitely still growing, net exports are becoming a much heavier drag on the economy. See, increased government and private investment are fueling domestic consumption, but that in turn widens the trade deficit as more goods have to be imported, which ends up slightly suppressing that top-line growth figure for the year. And finally, Part 6, the 2027 growth rebound. The story certainly doesn't end in a slump. If 2026 is all about weathering the storm and building infrastructure, 2027 is all about cashing in. As we move into 2027, the growth rate is aggressively revised upward to 7.61%. The ministry notes this is largely driven by a spillover effect. Basically, all those previous heavy investments, the machinery imports, the ongoing hydro construction, they are expected to finally bear fruit, accelerating domestic consumption and industrial output big time. We also see this major rebound happening in tourism. It's like a steady upward staircase. Even with recent tensions in the Middle East causing a near-term dip, arrivals are expected to completely shake off those shocks. The projections show this really confident, steady march toward a massive 300,000 tourist target by 2028 and 2029. The data strongly suggests the sector will normalize quickly, supported heavily by tour diversions and those highly priced and sensitive travelers. But here's the catch. This kind of growth requires massive, massive capital. To fund this future, public debt is expected to climb right back up. After that slight Q3 dip we talked about earlier, the debt-to-GDP ratio is actually projected to hit 109.3% by 2027 and 2028. And this is primarily driven by external borrowing. They need that capital to continue financing those massive hydropower and public infrastructure projects, which, at the end of the day, are absolutely essential for that 2027 rebound.
Which leaves us with this final, incredibly critical thought for our explainer today. As Bhutan deliberately levers up its debt to build out its future, will the eventual, fully realized surge of monsoon hydropower and record-breaking tourism actually be enough to carry the massive weight of tomorrow's debt? It's a highly calculated macroeconomic gamble, and for sure, it's one we are going to be watching very, very closely. Thanks for joining me on this deep dive. See you next time.